Today's guest thinks that a greater depression is coming. What would that look like amidst this world of high inflation, higher interest rates, war in Europe that's affecting worldwide distribution of really important everyday things that people need like wheat and fertilizer? Is this going to result in food riots? Just how would a greater depression look, and what can you actually do to protect yourself against it? I'm Keith Weinhold. It's international man Doug Casey and I on the prospects for a greater depression next on GRE. This week's guest is the founder of Casey Research. He's the author of the High Ground series of novels. He's also authored multiple New York Times best-selling books, often around the topic of crisis investing. He produces the show Doug Casey's Take and a daily blog at internationalman.com. I'd like to welcome back to GRE the international man himself, Doug Casey.
Well, thank you, Keith. I'm speaking to you from the quiet but peaceful little country of Uruguay.
That peaceful, small South American nation there. And, you know, Doug, back here in the United States, where I am and where so many of our listeners are, economically, it's a really interesting time. We had you here about 6 months ago to talk about ideals like freedom and liberty. And today, you and I are exploring the economy, and we're in these interesting economic times where we have high inflation, fast rising interest rates, war in Europe, which is really affecting the availability of the world's wheat and fertilizer. And are we in a good economy? You know, I kind of wonder. I think some people can point to something like, well, the unemployment rate's below 4%, so I guess the economy's good. But, you know, me as an American and a consumer, if I want to get a new car, oftentimes I find myself, I'd have to wait 6 to 12 months in order to get that car. And I still see empty shelves on grocery stores, and maybe I can't get fresh avocados if I want them. Well, that's not very economically viable if it affects my quality of living and my standard of life there. So talk to us about the state of economic health, especially in America today, Doug.
Well, we've entered upon what I term the Greater Depression. We entered upon that several years ago. Let's define the word depression. It's a period of time when most people's standard of living drops significantly. Now, the depression that I'm talking about, I expect is going to be very persistent. It's going to be very different than what happened from 1929 to 1946, much longer lasting than what happened then, and much worse also. People notice higher gasoline, higher food prices, all this type of thing, but it's just a portent of what's to come. Why do I say that? Because the government has a huge effect on what happens to the economy. It's gone from perhaps 5% of the economy at the beginning of the 20th century to really about 50% now. So everything that happens is based on politics, and that's a very, very bad thing. The American people, in their wisdom, well, they don't have any wisdom. They're actually quite stupid. It's like Einstein said, after hydrogen, the most common thing in the universe is stupidity. But so they elected actual Bolsheviks, actual Jacobins to office in 2020. And I say that because the people that are in control in Washington now have exactly the same psychology and exactly the same political philosophies as the people that led the revolutions in France and in 1789, and for that matter, Russia in 1917, and a number of other things. So this argues very, very badly for the economy. And you mentioned a couple of numbers, Keith, like 4% unemployment. These numbers are only marginally more trustworthy than the numbers that the Argentine government puts out.
Yeah.
I mean, they're fudged, they're manipulated, they're put out for political purposes. So no, we're in for some very, very rough running, and it's just started. See, things actually seem so much better right now than they really are, among other things, because the government has created trillions of dollars of new currency units just in the last few years. And that puts us in a fool's paradise, because it's just as if tomorrow morning or tonight, we deposited $100,000 in everybody's bank account. Everybody wake up tomorrow morning and say, that's great, 100 grand more. I'm wealthy. I'm going to buy a Ferrari or whatever. So you'd feel rich for the moment. But the consequences of that ought to be obvious if everybody got 100 grand in their bank account. Well, we did something similar to that over the last few years.
Well, there's an awful lot there with the Greater Depression. And, that makes one think about standard of life for just everyday consumer items. For example, things like scarcity in energy and scarcity in food. And I know that you have some pretty strong opinions about food riots with higher inflation, with a higher cost in one's everyday sustenance. This is really important stuff. And, oftentimes I think about these sorts of things, maybe a food riot transpiring in a developing nation, whether that's Tajikistan or Mauritania or the Philippines or Mali or wherever it might be before coming to the United States. And, oftentimes you think of consumer spending in some of those developing nations like that. You might have a person that spends 70% of their income on food. So if food prices double, you can see how that's a problem and how that would create a riot. Now, here in America, I don't know what percent of my income I spend on food. Maybe it's only 5%. If that doubled, I could weather it. It might lower my quality of life somewhat. But what are your thoughts about food riots? Are we seeing more of this with increasing inflation and a decreased supply of everyday consumer goods?
Well, I trade commodities, among other things. And generally speaking, the cost of food on a raw material basis is about doubled. I mean, the price of wheat has gone from $5 to $10. Price of soybeans, 8 to 16, more or less. Corn, 4 to 8. So this is going to be reflected right down the line in a lot of ways. And the cost of natural gas, for instance, which is critical to not only people heating their homes, but to making fertilizers and plastics, is about quadrupled. Although I've got to say, even now, natural gas in the United States, even though it's close to the highest level that we've ever had here, is only a quarter of world levels. So there's a lot of room left to run. Price of oil is trading at $110 a barrel. Just recently, we were used to oil in the $30, maybe $40 a barrel. So there's going to be knock-on effects all the way around. But you're quite correct. It's in these third world countries. In many cases, I don't even call them developing countries. I've been to 155, 160 countries, something on that order, most of them many times. I've lived in 12 countries. And at this point, I've got to tell you, I'm not sure that developing countries is even the right term.
It's a genteel term.
They're backward, and they're getting more backward. They're sliding downhill, especially the poor people in these countries that can barely keep body and soul together. So as all these prices go up, the cost of their cooking oil, the cost of their rice, their beans, their gasoline that they need for their little handheld tractors to plow their acre of ground, it's become quite nasty for them. And I'm afraid it's going to get much worse. So you said we're in for interesting times. And I'm sure you recall that is said to be an old Chinese curse. May you live in interesting times. And they're going to be very interesting, starting the rest of this year, next year, the year after. And it's going to go on for quite a while. So hold on to your hat. We've already seen the stock market basically fall out of bed. I mean, a lot of stocks, the kind of meme stocks that the Robinhood people have been buying, many are down 50%, 80%, 90%. But it can get much, much worse. I can give you lots of historical examples of that. And I know that a lot of your listeners are interested in real estate. I've been very actively involved in the real estate business for many years. And I'm a bear on real estate as well. the only good thing about real estate right now is that at least you're getting out of dollar. At least you're getting into a tangible asset with real estate. That's the good news. But the bad news is in the United States anyway. This is not true everywhere in the world, but it's true in the United States and Canada, that the real estate market floats on a sea of debt, and interest rates are at close to still all-time lows. I think they're going to have to go back to all-time highs. So why do I say that? Because retail price increases are running 10 to 15% per year. That's the real number, not the government's phony number, okay? People that lend money, people that buy bonds say, wait a minute, I'm getting 2%, 3%, maybe 5%. I'm losing 10% per year.
They're locking in a loss in prosperity.
That's exactly right. There's going to be a waterfall of selling in bonds. Interest rates are going way up. That's what happens when bond prices go down, interest rates are up. And it's going to be very hard to finance houses in the US at the kind of interest rates we're going to see. And in the US, if you can't borrow money, you can't buy or sell a house today. So I think the prices, even while the dollar is losing value, we have the paradox of a lot of real estate is going to go down in price even while the dollar is losing value. That sounds like a contradiction, but it's not. These things happen in markets.
Real estate, typically a good place to be in inflationary times. You also have that astounding dearth of housing supply helping to underwrite that market. But yeah, Doug, to your point earlier about calling some of these places developing nations, maybe we should call them unraveling nations. And I'm not trying to use a pejorative term toward other nations, because maybe America is one of those unraveling nations as well. So as we descend into what you call a greater depression, I'd like to build some more context on how you think that looks and what the milestones are between today and between a greater depression. Maybe that includes stagflation. Stagflation being the etymology of that word is it's a portmanteau of stagnant, a stagnant economy with inflation. Is that one of the milestones on the way to this greater depression that you described, Doug?
Stagflation is what they have in exaggerated form in places like Zimbabwe, where I've spent a lot of time, incidentally, and Venezuela, where I've also spent a lot of time over the years. The currency loses value at an accelerating rate, and asset prices drop along with the standard of living. That's what we're looking at here in the US. We talk about these third world countries. As things get bad in third world countries because of higher food and fuel prices squeezing people at the bottom, there's going to be mass migration all over the world. We're already seeing that across the Rio Grande. They say that about 2 million people are crossing the Rio Grande into the US every year. Now, I guess those people are put up with free food, free cell phones, free money, free education, free medical, but that could go much higher. We could be getting 3 or 4 million people piling into the US. And this is a very destabilizing influence where you have all these poor people of a vastly different culture wandering around with nothing to do, being supported publicly. The same thing is going to happen in Europe, incidentally. It has happened already, but it's going to accelerate, where you're going to have millions, tens of millions, eventually, of people, boat people, coming up from Africa and across from the Middle East to Europe, because they realize standard of living higher, free stuff. I'm getting out of these war zones where I'm living on a plot of sand with nothing to eat. So we're looking at mass social upheaval in the years to come, and a lot of it's due to the economic chaos created by these governments. And what's really created the chaos is they're printing currency units by the trillions, which, as I said, is going to also destroy the mortgage market. And you destroy the mortgage market in the US, you destroy the real estate market as well. So hold on to your hat.
America is a fragile place. I talked about an unraveling before. We're in a really precarious place where people commonly get cars with 7-year financing. Now, maybe that's a good idea for some people if you can arbitrage a fixed 3% car interest loan rate. But, I'm talking about people that can only afford a car if they stretch out their financing. I mean, it's been said half of America has no savings at all. Instead, they have loads of all kinds of debt, mortgage and credit card and auto and student loan debt. I mean, if those people need to lay their hands on an extra $500 or $1,000, they can't do it. America is fragile that way.
Yes, we see lots of people living on the streets in major cities, living under bridges. And in the future, as they lose their jobs, because they've been working in unsustainable industries. I hate to use the word unsustainable. It's become so PC and popular. But there have been a lot of distortions caused in the economy because of the money creation, where people have been doing things that they otherwise couldn't, where they've been basically living above their means, either by borrowing capital that other people have saved in the past, that's what debt does, or mortgaging their future. That's the nature of debt. That's why debt is bad and savings are good. Few people have savings today. Okay, so where do we go from here? What do we do from here? I mean, I own a nice house in the U.S. I've got a farm here, or I've got other stuff, but I don't consider these things as investments. I consider them as expensive consumer goods. Okay, in other words, like a car. A car is not an investment; it's a consumer good, although a very expensive one today. And just as an interesting factet, when I was a kid and I wanted a car. Believe it or not, I mean, some of your listeners will hark back to this era. Hey, you saved up for a car, and then you bought a crappy used car. That's right. The way it worked. And then later, they had 2-year financing for cars. A lot of people jumped into the 3 years, 5 years. Now it's 7 years. Yeah, it's crazy to take out a loan on a depreciating asset, because eventually your asset's going down in value while the value of your loan, or the amount of your loan, is going up. In fact, even when people buy a car with 7-year payments, at least they have an asset, not a very good one, but most people are actually leasing cars right now. So instead of at least a crappy asset, you've got an immediate liability. It's we're heading for big trouble on all levels. And, you mentioned student loans earlier, and the government is talking about forgiving student loans. Well, this impresses me as completely insane. Why should the average taxpayer pay off the loans of people that A, made the very bad decision of going to college, and the people that do go to college tend to be from the upper economic strata, so the poor guy's paying off the rich guy's debt. So the answer to the question is, don't go to college today. It's a waste of time and money in most cases. And the people that have made that mistake, well, you know what? Actions have consequences. So you're going to have to pay your debt off. On the bright side, the dollar is losing value so quickly that these loans will basically all be destroyed.
Yes, it does help debase debtors' debt with that weakening dollar. Well, Doug and I have more to talk about on the road toward a greater depression. That's next when we come back. You're listening to Get Rich Education. I'm your host, Keith Weinhold.
Americans are not saving for retirement. It's going to get worse as people live longer, so you need to think differently, but you can't lose your time. Real estate is the investment vehicle that has created more million and billionaires than anything else. Get Rich Education is one of America's top investing shows disrupting Wall Street. Your host, Keith Weinhold, is a true financial educator and has been an income property investor since 2002. Get Rich Education has created millions in passive monthly income for its followers. Now, Keith has a free course, Real Estate Pays 5 Ways. Sign up now at getricheducation.com/course. Invest in what produces income for you now and later. Use the link in the description to take the course for free. Real estate pays 5 ways. Get Rich Education is on every podcasting platform and has its own native iOS and Android apps. Join Get Rich Education Nation to create financial freedom through real estate investing. Subscribe wherever you listen.
Welcome back to Get Rich Education. We're talking with the international man, Doug Casey, about how America and much of the world could very well be on the road to a greater depression. You can learn more about Doug at internationalman.com. Doug, you mentioned the centrally planned economy and how America has drifted toward more and more of that as we try to control these high prices. Interest rates have now been hiked up. And, the Fed tried to raise rates in 2019, and they only got that federal funds rate up to about 2.5%. And you can kind of think of this as the base rate that other interest rates are based off of. And they only got them up to about 2.5% before they had to reverse course because markets were crashing. Well, now we've begun to raise rates again recently from 0. We've got the federal funds rate up to about 1%. So I guess what I'm getting at in this centrally planned economy, as we move from quantitative easing and printing dollars over to quantitative tightening and destroying dollars, where does that leave the Fed between a rock and a hard place here? How high can they bring rates up? Are they ever going to be able to get on top of inflation? Something's got to give. What are your thoughts with the Fed actions, Doug?
I hate to second guess what the people in the Fed are going to do. They're just bureaucrats that have cemented themselves into cushy jobs. The Fed itself serves no useful purpose. It should be abolished. It's the engine of inflation in this country.
Part of the math there is you, the viewer, the listener, you can always go to usdebtclock.org. Right now, you'll see that the United States has more than $30 trillion in debt. That translates, which you can learn again over there as well at usdebtclock.org, to $250,000 in debt per taxpayer is what that comes down to. So you can begin to see how vulnerable this entire system is with this centrally planned economy. But, Doug, most people are only used to this centrally planned economy where the Federal Open Market Committee determines the interest rate. So if we did away with that, a lot of people wonder how that would look. Would we have a federal funds rate, or I guess it might even be called something else, but would that just float with the market somehow rather than being centrally planned?
Look, you can get away with stupidity for years and years. Look at the Soviet Union. It got away with a completely dysfunctional system for 70 years, but then it just collapsed. I'm not saying that the US government is anywhere near as bad as the Soviet government, but we're walking in that direction. The US resembles the old Soviet Union more and more and more. And it's going to end badly.
So people wonder how that would actually look. How would a greater depression play out in the United States? How could that affect the everyday citizen? How would that look?
The average guy, if he saves money, and most don't save money, but if he saves money, he saves in dollars. Unfortunately, his dollars are being destroyed at the rate of 10 to 15% per year.
Right.
And he's getting maybe 1% in interest at his bank. So this is one way that the standard of living of the average guy is collapsing. Second thing is that a lot of people have HR 10s or pensions, things of this nature, but these things are being hammered with the collapse of the bond market and the continuing collapse of the stock market. So they're not going to get what they thought was there either. Third thing is a lot of people rely on Social Security, but Social Security was always a Ponzi scheme from the very beginning, saying that we've got $30 trillion of debt. That's only the tip of the iceberg because they have all kinds of undisclosed liabilities for instance, if the banks fail, the FDIC has limited assets to bail out the banks. It could be hundreds of billions of dollars or more. The Federal Pension Guarantee Corporation could be liable for hundreds of billions of failed pensions. So that's actually dishonest accounting. It's probably more like 150 trillion of debt.
And how does a greater depression play out on the consumer level? Will an American be able to get adequate things like natural gas for heating and electricity and sufficient food?
Well, everything the government in Washington is doing is counterproductive to a high standard of living in the U.S. They're trying to regulate and control things, and they continue printing up more money to try to keep the ball rolling. Frankly, I don't see any way out of this. Trends in motion tend to stay in motion until they hit a brick wall, reach a crisis. And at that point, anything can happen. And we're heading towards a brick wall crisis soon. I'm not talking a decade from now. I'm talking much sooner than that.
I'm thinking about if inflation runs away, would the government institute price controls, which basically don't incentivize anyone to produce anything if producers can't get above a certain price for it? Is that part of what we're talking about here?
Yes, exactly. The problem is that these people in Washington have power, and they believe that they have to do something, use their power. So yes, they'll put price controls on things, which discourages production. The best cure for high prices, incidentally, is high prices. High prices in an area mean that producers produce more. But in a highly regulated society that we're in today, it's hard to produce anything. It's hard for builders to build houses to make up for the housing shortages we have. So the problem is that trends in motion tend to stay in motion. And this trend is accelerating towards an actual economic catastrophe. The trend in motion is moving towards hitting a brick wall. And it's going to be ugly, and it's going to happen soon.
Then we wonder how one can best protect themselves, what kind of actions we can take if we're trending toward a greater depression. And these could be, for example, kinetic items like starting a garden or building and maintaining a greenhouse, or more passive things like investing passively in food or energy or housing, or classic inflation hedges like gold or even Bitcoin. What are some of those things that a person can do?
All of those things that you mentioned are wise, and I do all of them. Unfortunately, the average guy is being forced to become a speculator. He's being forced to try to second guess the markets to figure out how he can stay ahead of things. And most people are not very good at being a speculator, so it's not going to end well. It's like people trying to outrun the inflation of Weimar Germany in the early 1920s, and that didn't end well either for Germans as individuals or the country as a whole. What I think is going to happen is somebody will come along, some glib politician will say in 2024, look, I can solve all this. Just give me adequate power. And we're going to elect a man on a white horse, type of thing we see here in South America a lot. And then it gets worse. So what should you do? Yeah, the things you mentioned, have a garden, smart. Pay off high interest rate debt, smart. Take out a long-term fixed interest rate mortgage while interest rates on mortgages are still reasonable. Not do that. What do you do with the money from your mortgage? I think you're okay buying gold. Gold is a reasonable value today. I'd say buy silver coins, put them away. As far as other things are concerned, the stock market and the bond market are poison, although I'm in the stock market and bond market personally all the time. I think people should look at oil stocks right now. These big oil companies are very mismanaged, and they're very into ESG and diversity, inclusion, and equity stuff. But still, I mean, yesterday I bought a bunch of shares in Petrobras, the Brazilian national oil company. It has a 20% dividend yield, selling at 4 times earnings. And I think oil is going higher. So there are opportunities. But listen, we're on the Titanic. And it's basically rearranging deck chairs for most people.
Yeah, food, energy, and housing classically are a lot of those areas where people invest in times of great uncertainty and the potential for recession or maybe even a greater depression like Doug's been talking about here. And yeah, Doug, I've made the point with our audience here before that in times of high inflation, the everyday worker consumer kind of has two jobs. Their first job is their day job. And then their second job is learning how to be an investor or speculator to get rid of that dollar that they earned before it loses purchasing power and get out of that dollar that they just worked for.
You're absolutely correct, Keith. This is a time right now when it's still possible, voluntarily cut back on your standard of living so that you still control it, as opposed to waiting for bad things to happen when your standard of living is going to be cut back for you, whether you like it or not. So now's a good time to try to earn more and cut back your standard of living against what's coming in the near-term future.
Well, Doug, do you have any last thoughts as we potentially trend toward this greater depression?
There's really nothing cheap in the world today, but the capital that you have should be allocated towards the best bargains in relative terms. And if you want stocks, you should buy oil stocks, coal stocks, uranium stocks. And as far as personal possessions, you should own as many gold and silver coins as you can put aside for safety, for prudence, for insurance. You should educate yourself and learn actual economics and learn the techniques of being a speculator. That'll come in very handy as the markets are going up and down like an elevator with a lunatic at the controls, because that's the case. Try to diversify yourself politically. If you can't get a second crib outside of the U.S. or your native country, wherever that is, at least move from a place like California to, Nevada, which is an improvement, tax-wise and regulation-wise. So you can do things like that.
Yeah, more and more Americans are heads up about moving to a certain state for that regulatory arbitrage. Well, I first met Doug Casey in person at the New Orleans Investment Conference a number of years ago. And Doug has really been educating audiences, especially from an international perspective, on economics and liberty and freedom and a whole lot of important things to help improve your quality of life. So, Doug, if someone wants to engage with your resources and learn more about you, what's the best way for them to do that?
Go to internationalman.com. We've got lots of really good articles there. It's a free site. Do that. Go to my podcast, which is Doug Casey's Take on YouTube. And I think probably most important, you'll really enjoy the novels that I've written, Speculator, Drug Lord, and Assassin. There are more to come, but don't fall behind because they're a hell of a good read. And they explain all of these things in the form of fiction.
Doug Casey, thanks for sharing your wisdom. It's been great having you back on the show.
Appreciate it, Keith.